So that's why we're recommending, and I'm recommending really that a turnkey rental is probably the easiest way to get into, and the turnkey rental space is really it's a rental, a single family rental, or something could be a duplex or something like that, and basically everything has been done for you.
My guest today is Eric Martel, a former actuary and serial entrepreneur, forming various businesses, including a gourmet sauce company. He eventually settled on real estate investing and formed Martel Turnkey and Martel Invest, all part of the Martel Z Group, which enabled him to share with what he's learned so that others don't make the same mistakes that he did. Welcome to the show, Eric.
Well, thank you for inviting me, Steve. It's great to be here.
Yeah. So when it comes to financial freedom and getting more income, even if you have a full-time job or a side hustle going on, there are only so many hours in a day.
Exactly.
And there's only so much money you can make until you find a way to disconnect time from money. Mm-hmm. And that's basically what you talk about, right? In fact, you even wrote a whole book about it called Stop Trading Your Time for Money. Tell us a little bit about the book and how it helps people.
Yeah. I mean, interestingly enough, is that when I started writing the book, it was kind of like talking about my journey. I wanted to kind of like talk about my journey and why I was able to achieve financial freedom. And then that turned more into introspection about really why was I able to do this, and why some people are struggling to get it done. And then it turned into more focused on a tool to help people achieve financial freedom. So that's it was a very interesting process for me to write the book. And really, there was like three components. Part of it was the mindset, being able to kind of get rid of all the noise, the naysayers, and the inner voice and stuff like that are limiting your ability to do things, to take action, your fears and all of that. And then kind of like, how do you go beyond that? Because I think that's one of the first things, that in order for you to achieve financial freedom, you're going to have to do things that are a little bit different than what other people are doing. If you're following the herd, you're going to end up with the herd the whole time. So achieving financial freedom, you have to kind of like get out of that. And then the other thing, where I'm talking to other investors too, it's about kind of like aligning everything. Everything has to be aligned. You can't, if your goal is to achieve financial freedom and you start investing in in the stock market, or you start doing things, this is not really in line with your goal. So you need to kind of like, you need to find strategies and stuff that are aligned with your goal, that are going to help you get closer to your goal. And then you have to look at, the resources that you have available. So the amount of money, obviously, the time, as you mentioned, the time is also a critical aspect of it. When you're working full time, it's going to be very hard for you to start, doing some of the business, to open a restaurant, for example, or something like that. So time, money, other skills and stuff like that you might have, is very important. And again, that has to be aligned. That's going to affect the strategy that you're going to choose to do that. Also, then you come into the market, what product, what service is going to help you with this strategy. So all these things need to be aligned, and that's why I created the strategy alignment tool, which is basically a triangle where you have the two, the resources and the market, products and services as a base to support the whole structure, the whole strategy, and the goal. And then after that's a bunch of skills, kind of like, what are the skills that you need to do that? Obviously, I'm understanding financials, basic calculation, measuring performance, and all of that. And then the whole book is kind of guiding the investors towards the right strategy for them, and then how to understand how that strategy works, and also implementing that strategy. So finding the right market, finding analyzing opportunities, finding the right opportunities that are aligned with your goals.
Yeah,
and hopefully by the end of the book, they've done one or two transactions, and they can continue on.
Yeah, and certainly that helps people that, especially people coming into this, they've never run a business before.
Exactly.
And they need to know before you start jumping into these ventures, you need to understand how businesses work, how to start a business, how to run a business.
Exactly.
Because if you don't have those foundational skills, you're going to fail no matter what, really.
Yeah,
And
exactly.
you have to start out correctly. There's a business consultant, John Paul Mendoza. He has a book that says most businesses fail in the first 15 minutes. It just takes them 3 years to find out, because they really don't start at the right with the right mindset in mind, really getting into positioning and understanding business and everything else, and they end up burning through capital and ultimately failing. So it's good that the book starts out, and I think what about 2/3 of the book, would it be fair to say, sort of sets all this up, the mindset, the
Exactly.
skills and everything else, before you even get into these businesses and ventures that provide this kind of passive income.
Yeah, exactly. And I think this is true also. And when you mentioned the mindset too, is absolutely true. I mean, people don't realize when you're working full time, you're kind of like, people are telling you what to do, kind of roughly. But when you are doing your own business, when you are operating your own business, you are it. You make things happen. This is a very different dynamic than being at work and then going from meeting to meeting, and then doing things, and then things happen automatically. So so that's very, very different. And you're responsible for the performance. Yeah.
So your book, once you get to the passive income, it really sort of focuses. There are many different types of passive income. I mean, passive income is just income. Like I said, you've disconnected money from time. And once you get it started, and its own momentum produces the income, so you don't really have the expenditure of time for that. But what you deal with is a particular type of passive income. And tell me a little bit about that, and how that is described in the book and discussed in the book.
Yeah, so I think for my book is really geared towards people that are currently working full time, that they want to, retire early or just retire on time, leave a legacy for their children as well. So that's kind of the focus here. And so time being the biggest constraint, you want to find something that you can kind of start investing. So I looked at the number of different strategies. I also looked at some other strategies that were outside of real estate, but really I focused, even in real estate, there's so many different strategies in real estate that you can use, from apartment buildings, from flipping, wholesaling, doing private money or hard money lending, etc. So there's a wide variety of things that you can do in real estate. Which one do you pick? Which one is right for you when you consider that you don't have time to be doing all this? You don't have time to be. You shouldn't be looking at renovation or starting to do renovations and stuff like that. And so that's why we're recommending, and I'm recommending really, that a turnkey rental is probably the easiest way to get into. And the turnkey rental space is really it's a rental, a single family rental, or something could be a duplex or something like that. And basically everything has been done for you. So it has been renovated, it is rented out, and then the turnkey provider basically connects you with the mortgage company, with the property management company, with insurance and everything. So you don't have to do it, and you're cash flowing from day one.
Well, before we get further down that road on the turnkey system, we're talking about real estate investment. Now, you were talking more towards residential real estate as opposed to commercial real estate. And I mean, states' laws vary, but I know here in New Jersey, and I'm sure in a lot of other states, there are a lot more restrictions and laws on residential real estate rental, because it's the person's home, as opposed to commercial real estate. Do you deal at all or help people with commercial real estate investment, or is it really just residential? And if so, why?
Just doing residential because it's, first of all, it's something that's very easy to understand. for everybody. So everybody knows you buy a house, you buy and then you rent it out for people. There's always a high demand for that. It's very easy to understand the supply demand of that market, of that particular strategy. As opposed to commercial, I mean, it could be a little bit like trying to understand like triple net and then dealing with finding the right commercial tenant for your space and all of that, and then doing the any kind of renovations or fit the business into the space, or whether you're gonna there's all kinds of different things that you can do in there, and it's not it gets cloudy pretty quickly. My recommendation is to go with the single family rental. You're right, there is a little bit more constraints, and this is one when we're looking at the different markets where we want to invest. I think it's important that your number one criteria should be to be in a landlord friendly state. So I invest, for example, in Memphis, Tennessee, in Cleveland, Ohio, because these are, it's not like you can't just kick the tenant out willy-nilly, but there are some rules. But at least you would be able to get a hearing if the tenant is not paying, if the tenant is doing damage to the property or whatever. You can actually evict them more easily than if you are in a state like California, for example.
Well, getting back, so someone is just starting out, just stepping into this. What's the best investment vehicle for someone just getting into it? I mean, is there a subset or an area of residential real estate that you recommend people start with first?
What do you mean by that? I'm not clear.
Well, I mean, they're just getting into it. They're just getting their first property.
Yeah.
What do you recommend is the best way to start for your first one, I guess, getting into it?
So for me, I think it would be like a single family rental, a turnkey single family rental that you acquired from a reputable turnkey provider. So that's probably the easiest, because that everything has been done for you. The tenant is already in place. They will hook you up with all the different resources that you need, the property management company and all of that. So you don't have, if you're working full time, you don't have time to start looking at, oh, is this the right house? And then finding a contractor and finding, am I going to get the right rent for that? And then, all that kind of stuff. So it's a lot easier. And some of the markets that I invest in, I mean, the price of the houses is also something that's a little bit more affordable when you come from the coastline, east or western coast of the United States. So that makes a big difference as well. So it kind of reduces your risk a little bit as well.
Well, I mean, you're talking, and we'll get into this in just a moment. Your Martel turnkey system, but let's just say, setting that aside for a moment, someone's just they themselves decide that they're going to get into this, and they read your book, and so they have the right mindset and they're comfortable having the skills as far as the business is concerned. How do they find their first investment property?
Yeah, so I think ideally you would go into, you can go on Google and search for turnkey rental provider, and then you'll be able to find a number. And hopefully Martel Turnkey is going to be right at the top of that search result. But there are other ones that are also doing a very good job in similar markets that we're in. And really what we're looking for in terms of the numbers is we're looking at positive cash flow. So we're looking at, so on our website, for example, martelturnkey.com, we have a list of properties that are available, that are for sale. We also show properties that we have done in the past. We've done over like 330 projects, not all of them are on the website, but some of them are there. And then you can look at that and see, okay, the kind of renovations that we've done, the kind of the price that we sold them for, and all that kind of stuff, and as well as the cash flow that was generated from that. And then you can look at the ones that are available for sale as well and say, okay, yeah, this is this is the amount of cash flow I'm going to get. This is the down payment I have to put towards the property. And then we're going to set up everything else that you need in order to do that. And really, you talk to one of our somebody on our sales team, and then they would explain the numbers in details and help you kind of like walk you through the whole process of acquiring the property.
So when we're talking about trying to find your first investment property, you're not recommending that you read the book and go out and do it on your own. You still think it's a good idea to retain either you or some other turnkey company to help them to find the right property, right?
I think at the beginning, yeah.
And I saw on your website, you go to that website and it shows you all these different properties and shows you, the price, the down payment, the rate of return that you expect them to get. So by looking at your site or similar sites by other companies, people can get an idea of what is a good starter home as far as renting is concerned, right?
Yeah, exactly. And I think people can do it. Like they can go and buy a distressed property, find a contractor and all of that. But my point of view is that when you're working full time, this is going to it takes more effort than people imagine. To find the right contractor, making sure that they're doing the right amount of work, not too much work, not overly renovating the property, making sure that you're in the right area in terms of crime, in terms of property ownership, and all that kind of stuff, and make sure that you're going to get the right rent, and then finding the property management company and all of that. So there's a lot of work involved. I mean, we make it look very easy, maybe a little too easy for people to say, oh, I can do that. But there's a lot of little details. And even us, I mean, after all the projects we've done, every once in a while we get bitten, and we lose like $10,000-$20,000 on a house because there's something like a pipe to the city is completely plugged, and then a drain that was a main drain. I think that's the most recent one that comes to mind, and we have to rip the whole thing off and replace the main drain to the city.
Well, there's always risk. I mean, when you enter,
there's always risk
in any business. But I think that from the understanding I got from your website, that you really, there's a lot of hand holding here. You help the person purchase the property. You match them up with a mortgage company. You match them up with a management company, and that management company handles the day-to-day stuff, right? They handle any repairs that are necessary and process the payments on the rent and things like that.
Yeah.
And I would think part of it is just from the very beginning is getting a mortgage payment that's going to be significantly lower than the rent that you command for that property. Because if you're not, people think, well, as long as I've got enough rent coming in to cover my mortgage payment and my real estate taxes and my insurance, then fine. I wait till it appreciates over a few years and then I sell. But they don't consider things like the faucet doesn't work, the toilet doesn't flush, and you're spending money for repairs that also has to come out of that rent. Plus you want to make some passive income, right? So that's what you're talking about, return on investment or rate of return, as far as what you can expect to be able to charge for rent over and above the mortgage.
Exactly. And that would be, when we talk about positive cash flow, you have to pay for property management, you have to pay for insurance, property taxes, and your mortgage. So that's why we're setting you up with the mortgage as well. We know what the insurance is going to be because this is the same insurance company that we use. We know with the mortgage company, we have like 2 mortgage lenders that we work with very closely, and we're fully integrated with them. We don't make any commission on any of these referrals. This is just make it easy for you to get the service that you need and get the turnkey. So we know all the costs up front. So for us, we calculate and we tell you exactly what the costs are, and we tell you what the cash flow is going to be at the end of the month. And yeah, so you will have to take some reserves on that and say, well, in case for repairs and maintenance, maybe you want to put like 5% aside of your gross rent, just
Mhm.
in case there are repairs or maintenance and stuff like that. But
Is there a certain period of time from the get-go, from starting, before you start making passive income on the property? Or is this something that people can expect to start generating money right away?
right away, because we put the tenant in place before we close. So right away, you know, we're not going to close on the property unless there's a tenant in there. That does two things. I mean, on one hand, it's going to assure you that we have a tenant that is paying the rent that we said we would pay.
Mhm.
And then the lease has been signed, and then they're already paying the rent. They've already paid the first month's rent. So you're covered for that.
Well, certainly, as you say, setting a reserve or whatever, you know,
Mhm.
when you, I guess my question is too, you start receiving rent, and certainly it has to be cash flow positive to cover, as I said, mortgage payment, taxes, insurance, um, and then fees for the rental company. But then on
Mhm.
top of that, you're going to want to start setting aside money into a fund for repairs.
Yeah.
So is it so front loaded that the rent can cover not only all of that, but a profit on top?
Yeah, I think you can definitely do put a 5% aside on the gross rent,
Mhm.
and then you're still gonna cash flow. So you make cash flow like $250 a month after putting like maybe $25,000 down with the closing costs and all of that. So yeah, so it does cash flow. Right now, the properties are cash flowing at about 10 to 12% cash on cash returns.
Mhm.
So that's a pretty good return compared to a lot of the properties out there.
And how long do you recommend people keep these properties? I mean, there's the part of the income, of course, is the appreciation over time uh,
Mhm.
in uh, uh, in certain areas, and getting the benefit of that capital gain. And if you have a tenant in place and everything else, and you sell it to another investor, then it has value.
Mhm.
Is there a particular advice you have on how long people should hold on to these properties, or is it pretty much on a case by case basis, or based on how you picked the property in the first place?
So it depends how aggressive an investor, and I don't mean aggressive
Hmm.
in a negative way, but it depends how aggressive or how active you want to be as an investor.
Hmm.
If you want to really grow the wealth rapidly and stuff.
Hmm.
If you're just waiting you just want the cash flow and you just want to build a nice portfolio for you to
Hmm.
live in in Mexico or something like that, then you can definitely you can just do that and keep it. But the other thing too is that if you want to be more aggressive and more and build more wealth, then you may want to sell it after 5-10 years and
Hmm.
then move into a multifamily maybe, or but that's kind of it really depends on kind of like what your end goal is and what your
Hmm.
strategy. So if the turnkey rental is a stepping stone into a bigger strategy, then that would work. That would work great. And at that point, my recommendation would be build a turnkey rental portfolio until you have about 80%, maybe 90% of your living expenses covered,
Hmm.
and then do the jump, quit your job, and then and do this full time, or reduce the hours or something like that. But yeah, then because it opens up, once you have the time to work in real estate entirely 100% of your time, that changes everything.
Hmm.
Changes your tax benefit, but also changes the number of opportunities that are open to you.
Now you have under your Martel Z group, you have Martel Turnkey, which is what we've been talking about, but you also have an entity called Martel Invest. How does that
Yeah.
differ from Martel Turnkey?
So Martel Invest is more for multifamily properties. So
Mhm.
that's what we set that up for. So it invests in different multifamily projects.
Okay, so you're into an apartment building as opposed
Yep,
to a single family home or duplex or triplex.
that's correct. Yeah.
All right, so it does the same thing just with larger buildings, and I guess as you would start with the Martel Turnkey, and as you said,
Mhm.
once you start getting to the point where it'll cover, your all of your living expenses, and you can quit your day job, then you would move up into Martel Invest into something more complicated.
Yeah, and exactly. So some of our investors actually are doing things with Martel Invest. So they basically are investing in, they're part investors or partners in some of these buildings. So we have a few apartment buildings in Midtown Memphis, and then we have some partners that are involved in those, and then we share the cash flow with them.
In addition to your website and your book, you also have some other multimedia resources. You have a podcast, don't you? Break Away from the Rat Race.
Yeah,
Tell
yeah.
me a little bit about your podcast.
Yeah, so Break Away from the Rat Race. So that was my first YouTube channel where I started interviewing and communicating to people kind of like how to achieve financial freedom and share my experience with and my journey into real estate and some of the crazy decisions I made to to get to where I am, including selling my house. So so that was interesting, but also really speaking with a lot of great real estate investors and how they achieve financial freedom. What was some of their roadblocks in achieving financial freedom?
Huh? All right, so it sounds like a lot of resources. You got a book, you've got a YouTube channel, you got a podcast. So there's a lot of things that people can learn about
Mhm.
this if they're interested in this, and if they think it's right for them, they can certainly reach out to you
Yeah.
and see what they can do to generate some passive income.
Yep.
All right, well, great, and I'll leave links in the show notes to your website and the podcast and the uh, and your book and your video channel. So folks out there, listeners can check out those resources. Certainly encourage you to do that. And thanks for being on the show, Eric. And um, best of luck in growing your business and helping other people achieve financial freedom.
Yep. Well, thank you very much. Thank you for having me.
Mhm, mhm.